Good afternoon, everyone. I've just got a quick update, as I said I would do several weeks ago when there was something worthwhile saying. And as you're probably aware, I've been talking now for several months about this incredible bull market in gold stocks. But I've equally said that there would be corrections along the way. And I believe that overnight we saw the start of that correction. So it's appropriate now just to give you a quick perspective on how this might play out. So from my perspective, it just needed a trigger. We'd had a very large advance in the gold stock indices, something like 140% advance from the lows just back in February. This is the strongest and most rapid advance that we've seen out of any bear market in gold stocks. And so it was always going to be that once there was a trigger and the market started to roll over, that the response would be pretty sharp. And that's what we saw last night, with lots of stocks in America down between 5 and 10%. This is in the precious metals. Now, the trigger last night was, of course, the Fed minutes, which are by no means conclusive because, look, these guys use these things to try and push the market around. I don't think it really matters that much, but just for the record, the Fed minutes indicated that a June rate rise was still possible. I'm pretty lukewarm on whether that's going to be the case or not. I don't think the Fed can do very much. But nevertheless, it was the trigger to cause the US dollar to rise. And that, of course, caused the gold and silver to fall a little bit. Now, gold, the price of gold fell by about 1.7%, of which about 0.5% of that was due to the currency effect. The other percent and a bit was due to the fact that the people had decided to take some profit on that particular move. So where to from here? I see two scenarios at the extremes. One is that we see another 5 to 10% correction over a period of a few days or a week, and that would all be pretty mild, and that would be probably the best case scenario. So I think you should expect at least a bit more downside. The other extreme is, and this is still within the bounds of a normal retracement within an overall bull market. So I hasten to add, I'm not changing my stance on the fact that we're into a multi-year bull market at all. History would show that retracements of anything up to 40% in a bull market are perfectly normal. So this doesn't change anything from a longer term perspective. So a 38.2% Fibonacci retracement or a 50% retracement of the advance we've seen from the middle of February is equally likely, and that could play out over a month or two. So I guess the key thing here is, if you are not comfortably positioned to withstand that sort of downside, then you need to do something about it immediately. Don't wait and see how it plays out, because if scenario 2 does play out, then you may be caught with more exposure than you're comfortable with. Now, if it does get down to that 38% or the 50% retracement of the advance, then it creates a wonderful entry opportunity for the medium to longer term. So as long as you position well, I think it's something that you should be basically cheering on. So that's just the quick message to alert you to the fact that there really was quite a decent change. Let me just show you on the chart what it actually looks like. So this is GDX, which is the main gold stock ETF. So you can see that we did have a downtrending channel in play. We've had a very, very substantial rise from those lows. We broke through that channel. We broke through several horizontal resistance levels. One here at around $23. There was another one coming up here around $28. We haven't made it to there. So let me just zero back in again. But you can see last night, that was quite a sharp move. That's a very, very definite downward candle on big volume I think the overwhelming odds are that this will follow through to the downside. So where could it possibly go? It could revisit the top of this channel, so a retest of the breakout would be normal, and that would get us down to about $21.40. Or alternatively, if we put a Fibonacci scale on this, then we could be looking at a 38.2% retracement gets us down into a very similar kind of area, just under $21, or a 50% retracement gets us down to just over $19. So I think they're the targets. Again, if it got down to this 50% level, that would be consistent with just about every bull market that I've ever studied. If it doesn't make it to the 38.2, but instead fizzles out fairly soon and starts to turn back up again, then that tells us all we need to know about the strength of this market. So we'll get some great insight about the next 6 months to a year out of what happens in the next few days and the next few weeks. So stay tuned. For anyone who's not a member, there's my contact details, and always happy to chat. That's it for this quick message. Cheers.